All right, is commercial real estate in trouble?
No.
Spoiler alert, it depends, but mainly, I don't think so. Hey, my name's Jesse Vergali, and it's been far too long since I put a video out. And this video is a result of something I posted on my podcast, Working Capital, the Real Estate Podcast. You can check that out down below. But mainly, I was asking if commercial real estate was in trouble and what we think the last 18 months will have as an impact on the next few years going forward. Before we get into it, if you like these videos, hit the subscribe, hit the bell thing, write a comment. If you write a comment on a specific video, I'll try to do one specifically to that. Anyways, let's recap what commercial real estate is. I want to do this in a concise way. I want to talk about what commercial real estate is, the impact of the lockdown on commercial real estate, where the areas of opportunity are, and why real estate has a cyclical nature, and that's not necessarily a bad thing.
Real estate. Buy real estate.
Okay, number one, broadly speaking, when I talk about commercial real estate, I'm thinking about four major areas. That's retail, office, apartment buildings, and industrial. Now, as I mentioned before and on my podcast, those can get broken down into smaller segments. Industrial can be last mile delivery, warehousing, automotive. Apartment buildings can be manufactured housing, regular apartment buildings. Office can be co-working, flex space, traditional office, etc., etc. So, four major food groups: retail, industrial, office, apartment buildings. The question of is real estate in trouble or is real estate a good investment really has to dig down onto which type of asset class you're talking about. There is absolutely no doubt that retail has been hit over the last 18 months. Smaller shopping areas, hoteling, and a variety of different segments within the retail asset class have been hurt. Now, the question is, what is the result? What do we have to look for in the future? Are there opportunities? I think there absolutely are. When it comes to retail, the PwC studies said that in the United States, there's 23 square feet per person of retail space. It has been overbuilt for a number of years. Compare that to European countries that hover between 3 and 6 square feet per person. And in my country, Canada, we're somewhere in the middle at 15 or 16. So the reality is a lot of this stuff was overbuilt and has really needed to shift into alternative highest and best uses. So now on the opportunities end for retail, I think there's a couple. Number one, I think hotels have a really big opportunity here for rezoning and pivoting those type of buildings into apartment buildings. It's not a surprise that hotels had a 90% drop in revenue on average across the board. With a growing need for affordable housing in a variety of cities, I think this pivot from hoteling to rezone properties into apartments could fill that void. This has caused some investors to start looking for distressed assets in the form of hotels in certain markets that have good fundamentals and that they believe that there is a limited supply of affordable housing and housing in general. Secondly, for retail, I think there's a further repurposing that's going to take place. A lot of the retail that has done very well has been larger grocery store anchored retail in good markets and good areas. Not surprising, this is largely due to essential services that have been provided over the last year and a half. I think similar to other change of use zoning, investors are taking a serious look at mid-tier type of retail properties or plazas, either changing that zoning to industrial, which we will talk about, or residential, which we'll also get into. Secondly, when it comes to industrial facilities have really been the darling of the industry in the last year and a half. We have seen last mile delivery, we've seen warehouses, just the shift from bricks and mortar retail to multiple online services over the last year and a half has really impacted industrial. And where vacancy rates prior to the lockdown were extremely low, they're even lower in major markets. I believe there will be a continued amount of investment put in quality industrial product. I think last mile delivery is definitely an area a lot of investors are looking to. I think distribution centers, no doubt, are becoming more and more popular, especially near major cities. And I don't see why, especially where interest rates are today, that there's going to be a continued investment in industrial. The real question is, are you going to be able to actually find the product? There's more and more money chasing less and less available product. On that industrial front, as I mentioned with the repurposing of retail, I think that there's a lot of lower tier to mid-tier type of plazas that have remained vacant for a long time now, at least the last year and a half. Those type of assets, I believe, in markets with good fundamentals positioned beside cities that have growing populations, I think are an area that investors are definitely going to be focusing on in the next few years. Now, when it comes to apartment buildings, I feel that there was a lot of fear in the beginning of 2020 that people were not going to pay their rent, that there were going to be a number of defaults. Nothing could be further from the truth in general. We saw that 90% plus of tenants were paying their rent on time and have continued to do so to date. We've seen more investment in manufactured housing, A-class, B-class, even C-class product. With interest rates again at a low and a little bit dissimilar from 08-09 where there's actually credit available, we're seeing a lot of money go into this multifamily class. People are going to continue to make investments in multifamily. I think the real problem, like industrial, is going to be trying to find good deals. This is where the off-market deal environment is going to be one of the only places you can really go to get quality assets. It's not going to be one of those things where you can just look on MLS and be able to find the perfect apartment building. Lastly, when it comes to office, the real question is, what does the future hold? Now, I don't have a crystal ball, but you've heard a lot of people say that the office is dead. I think that's completely wrong. I think the office was going through a shift prior to the last couple of years, and I think it's been accelerated as a result of what we've gone through over the last 2 years. Now, what does that mean ultimately? Well, I think for investors, they're going to be looking at assets more granularly, looking at the actual tenants that make up that space. I think it's natural for us to want to work together, and I think the city is going to continue to be something that's important for people. Now, people a lot smarter than me have talked about whether we're going to go to a hub and spoke model, whether the HQ is dead, the 5 days a week is dead. I think we're going to come out of this in some version of office space where employers are going to be a little bit more flexible when it comes to working from home, harnessing technology, and having a work environment that's more conducive to work-life balance. From an investor standpoint, I think this means opportunity in certain areas. Now, if you live in a major city, if you're in North America at all, unless you're really looking at smaller or mid-size office, the office game has been historically limited to larger investors, pension funds, real estate investment trusts, large family offices. However, that doesn't mean that you can't invest in offices. You can look at real estate investment trusts that specifically diversify into offices. Now with REITs, you have to understand that there is a volatility that comes with being on a listed exchange. You can go into syndication where your syndicator or private equity company focuses on offices, or you can go the crowdfunding route and check various companies that focus on offices or have specific portfolios or investments that focus on office. Ultimately, I am a glass half full kind of guy, and I think there's going to be a lot of opportunity in the commercial real estate space. Every asset class is different, and that's why we have different specializations of investors. I think if you're a conservative investor right now and you're very careful about what you're investing in, I do think there are a number of different plays and asset classes that make sense. Bottom line is, if you're in real estate and real estate investing, hopefully you're in it for the long term. If you haven't experienced a downturn, whether that's 01, 08, 09, or even the last couple of years, you may not be used to the cyclical nature of the economy or specifically real estate, but that's the world we play in as investors. So good luck out there. If you like these videos and you want to hear more, drop a comment below. I'd be happy to oblige. Anyways, that's it for me. Have a good one. Take care.